We are back to close out another week in the markets. We have jobs data today. No one knows if it's bullish or bearish, but we're going to try to parse through it. Before we get going, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We are not financial advisors. We're a few guys who love following the markets, placing our bets, but we recommend you do your own research for making any buys or sells. Kev, we saw the markets react positively today to the latest jobs data. I'm going to recap that real quick as we get the show started. So today's numbers are focused around non-farm payroll, unemployment rate, and hourly wages. So non-farm payroll expectation was 240,000 jobs added in the month of June, came in under expectation at 209,000, which is a bit surprising after yesterday's ADP number came in at 497,000 jobs added in the private sector. But that's neither here nor there. So the expectation was high. We came in under that. So that's your bullish sign that, hey, maybe the Fed is starting to get the labor market under control. Unemployment rate came in at 3.6%, down from 3.7 last month. The expectation was 3.6%. Now, on the flip side, the bearish argument is that we saw an increase in hourly wages. So hourly wages came in at up 0.4% month over month versus expectation of 0.3%, and then 4.4% year over year versus an expectation of 4.2%. We also saw the average work week tick up by 0.1 hours to 34.4 hours. So the headline numbers would lead you to believe that the Fed is winning the battle and is cooling the job market. But if you look lower, the less sexy numbers, specifically around hourly wages, is showing you that there's still a long way to go to get inflation under control.
Yeah, absolutely. I mean, I think the big thing is the divergence that we saw between the ADP numbers and the data that we saw today, how many jobs were added. I also think that the inflationary aspect of wages going up, that's not necessarily a great sign. It seems like we're just picking and choosing what sounds good and what looks best and fits our thesis pretty much for where we want the market to go. I think that's what a lot of people are doing right now. But again, PCE was been kind of shitty for the past 3 months. It's been hovering at the same spot.
The
data that we got
today. PCE has been hovering in the same spot since December. If you really look back, the PCE number has been between either 4.6 or 4.7 for the last 7 months.
Yeah. Is inflation coming down then? I don't know. Wages are going up. That's kind of the stuff that you have to keep an eye on and questioning, because again, if we just look at the headlines, like you said, I mean, it seems like everything's just going to be okay, right? We're all going to make it out of this, but I don't necessarily buy that. I think that we have to look at this as a whole and then build a narrative from there, because this is not good data, in my opinion. I think the markets reacted very lackluster to this data, but also it's data that we were just kind of not sure exactly which direction it's going to affect the Fed. I'm not sure, like you and I talked about before the show, we're not sure how the Fed is actually going to even take some of this data in. It's really crappy. I mean, it's we used to get excited for data when it came out. Now it's just well, kind of good, kind of bad. Not really sure how people are going to take it, but markets probably stupid however they react. Today, actually, pretty neutral though, so I'll take that.
For sure. As we get going real quick, appreciate everybody for being here. GM Randy, Mr. House, Ace, you guys are the best. Appreciate your support. People will always, you have to know what their intentions are, because people can take data and spin it whatever direction they want, right? Like the pundits will spin it whatever way they want. At this point, we know that bull markets are better for ratings than bear markets. When things get too bearish for too long, people don't want to tune in as much. But when things are good and you can really push that narrative that, hey, we're going in the right direction, bull market's back, let's make some fucking money, then more people are going to tune in. So that's why I think you see a lot of these places trying to spin it positively. You could also say the same for a lot of the Fed presidents. There are those that really want to be bullish because it's going to fit their agenda, right? We also see on the political side, the Democrats want to be bullish for sure. You had some lady today on Bloomberg talking about how Bidenomics is doing its job and everything is great because there are all these jobs added. Well, let's ignore the fact that the employment, 90% of the people who lost jobs are minorities, are Black. And so it's they want to pick and choose what parts of the numbers fit their narrative. And so you have to really understand where they're coming from, what they want out of this data, and toss aside the bullshit and focus on the numbers that actually are going to move the market and help us predict forward. Because these are all, this is all numbers from June. It's like,
Yeah.
it's not the end all be all. It's kind of a piece of the puzzle of where things are going. And that's how we have to use it. We can't use it as like this one data point is going to move everything. So to me, seeing that number of the hourly wages, like if hourly wages begin to, continue to go up and are higher than the inflation rate that's being reported, that tells me that there's going to be a green light for people to keep prices higher for longer because they know the consumers can afford it. And that right there could tell us that, like, hey, maybe we are going to get that bounce back up inflation in inflation that we've been dreading for a while.
Yeah, I think we've said on the show many times that we do expect a spike in inflation at some point, right? There's a lot of things that are kind of adding up to the point where it's like, okay, we could see this cause inflation to spike up. We could see this cause inflation to spike up, whether it's energy crisis. Obviously there's a lot of stuff going on with China, Russia, and the Eurozone right now. We could talk about this, wages continuing to rise, even despite unemployment being extremely low. Like there's a lot of things that could, potentially spike inflation, but it's probably going to be a culmination of everything, right? But it's really insane just to be thinking that we're getting through this bear market. Like I saw, what was it, Blockworks? I think that they're like a crypto like newsletter or something like that. They were saying that congratulations, you just survived the longest Bitcoin bear market. It's like, how do you fucking know that? You're right. And then it goes that goes in hand with how everything is easier to spin when we're in a bullish state of mind, right? Everyone, money go up, brain feel big, brain feel good, money go down, tiny dick, tiny balls. That's how it plays out, right? So a lot of people right now are just really hoping that, there's going to be opportunity to make money. But I think if anything, it's just trapping people. And a lot of this data just seems like it's really skewed. And that might just be, we're getting tons of revisions. Like we got 2 more revisions from, what was it, May and June. And they're pretty drastic numbers. It was like, I think it was like 70,000, 90,000 in difference. What was it, non-farm payroll jobs or payroll or something like that?
Okay.
But it's still insane to me that we're seeing this data come in. Either we're going to react to it, we're not going to react to it, but then we have to be patient enough to see what the actual data is, once we get those revisions. Same thing with GDP.
And let's look real quick at the entirety of the data we've got in the last 2 days. We mentioned the ADP employment number came in really high. We also saw with the JOLTS report that there's still 9.8 million jobs available, right?
Exactly.
And so there's 9.8 million jobs available. Unemployment's only at 3.6%. Like that's low, and job openings are high. So what does that say? We're going to need, a lot of these companies are going to need to continue to increase wages to recruit people in, and that's going to keep pushing that wage number up. If inflation continues to come down, that wage number will once again is going to rise above the inflation rate. That's going to give a lot of companies, like groceries, whatever, the go ahead to be like, okay, we can keep prices high to help our bottom line because people can still afford that. Once again, there's that spike in inflation. So in totality, in the last 2 days, like this data is not like a good sign. Like maybe in the near term, markets respond positively. People want to put more money out there, but in the medium term, over the next like 6 to 18 months, I don't think it's great data.
You made a really good point there too, talking about how companies are going to start hiring people and have to start paying competitively. I just want to bring up something that I saw yesterday, and we saw Samsung's profits in Q2 drop 96%. Right? That's one company that we've heard of. I think you mentioned a couple episodes back about how earnings season might be, catastrophic for a lot of things in the stock market. It's another thing to keep an eye on. And again, if earnings are bad, what do companies tend to do? Lay people off so they could buy back the stock at a lower price. Just again, this is a cycle of what companies do, what people do whenever times get tough. When money gets tight, then they obviously are going to resort to trying to spread operations extremely thin and then survive. But we could, again, I don't necessarily think that in a bull market companies' profits are going to drop 96%, right? And if people are going to continue trying to get jobs and they keep hiring, I think they're going to lay them off pretty soon right after they hire them. Again, it's always going to be the people that are last to hire that are first to fire. So that's just another thing to keep in mind too.
Yep, absolutely. Okay. Other news, we saw, if we want to talk a little bit more about Meta for a second, looks like Twitter is suing Meta
Good.
for a whole gaggle of things around the launch of Threads. So that should be interesting. On the Tesla front, we saw today that Mercedes-Benz is going to start using the Tesla charging standard on their electric vehicles. So Tesla was up more earlier in the day. It's pulled back a little bit. It's relatively flat now. We see that the gains that the markets had made earlier in the day are starting to retreat as we move closer to close. We got about 45 minutes left in the trading day. We're seeing, the Dow pull back, the S&P and NASDAQ pull back as well. So I think it's continuing to show that Tesla is not only doing a great job of delivering more and more vehicles, but they are really setting themselves up as like the go-to for electric vehicles. So now that's what GM, Ford, and Mercedes that are all using the Tesla charging standard in the United States. That's pretty good company to be with, and people have relying on you there. So I think that was an interesting piece of news. Anything else that jumped out at you today before we get into the charts, so we can keep the charts down and dirty? Let's move through those pretty quickly.
For sure, you got it. Yeah, I think the only thing that I've been keeping an eye on is obviously Binance. We got some more information out of that yesterday. Of course, CZ was the first one to defend his company on Twitter with the number 4. He said that, well, basically what happened was like 4 people, I believe, are leaving the company and they're all heads. And that's pretty much in response to how he's been dealing with a lot of the crime, not crime. They haven't been convicted of crime yet. But a lot of the way he's been handling some of these lawsuits and jurisdictions and the SEC, a lot of people are just kind of like, maybe this isn't. We don't want to be a part of this. And this is kind of similar to what we saw with FTX, right? We saw a bunch of people leave the company right before the fall, the collapse, and then everyone came in. So history doesn't always repeat, but sometimes it rhymes. And
it often leaves clues. That's for damn sure.
Cookie crumbs all the way to the end. And we saw that. And, obviously BNB's price bounced, didn't bounce down. It went down and then it bounced back a little bit today. So kind of neutral after he came out and made that little statement. But again, I think there's just a lot of people who are unsure what's actually going to happen there. Again, both parties can be wrong and Binance could still go to zero, or Binance can survive and both parties can still be wrong. I think the other thing that we're starting to see is that people are finally recognizing that True USD, or not, True USD. So TUSD is that stable coin. I saw a Bloomberg article where it was like 90% of the reserves are held by Binance in separate wallets. So that's pretty interesting to keep an eye on too, because again, we've been talking about it, how is Binance able to push this market up, and we're starting to see it on their exchange, and we left tons of fair value gaps all the way up to 31K and 31 plus. And it's been through stable coins, and True USD is one that they adopted. And we could see the correlation between, that market cap of that coin and Binance and Bitcoin, BNB and Bitcoin shooting up at those times when they mint a certain amount of that stable coin. So we definitely see a lot of correlation there. And I think people are finally starting to realize it. We haven't really broke down from anything yet. Yeah, see, Ace saw it too. Ace is the man. He's waiting for Nance to drop. But yeah, there's a lot of things that are adding up with Binance. I think we're not too far from seeing, further news come out, and we're pretty close to extreme support. Like if we get below a certain level, I don't know, man. I don't know what's going to happen. Fireworks maybe, but it's definitely not great to see 4 people leaving the company that are pretty high up in the company, positions.
Yeah, absolutely. All right, let's look at some of the charts as we're wrapping up the week here with TradFi.
Let's do it. Do Tesla.
Let's do Tesla, and I don't think we did Meta yesterday. We did a pretty good job on Meta yesterday. I don't think we need to spend too much time there. It's pretty flat today, but let's take a look at Tesla and see what kind of Listen, so far, Kathy, her buy is looking good. Is that going to continue moving forward? You got your Willy Wonka set up with the lines here.
I do.
Give me like some Dr. Seuss vibes too. Oh, the places we'll go. What are we seeing in the charts for Tesla?
Yeah, so Tesla, obviously, this is the macro chart. This is on the weekly, right? We can see on the stochastic RSI, we are completely overbought. We're at 96 and 97 for the stochastic RSI. I mean, that's pretty massive. The 100 is the highest you can go, so we're not too far off from there. But we are seeing some weird stuff in the chart. So I'm going to remove this real quick just because we don't need that right now. But things to keep in mind on the macro, we have the 15 to 200 EMA right here, right? We have a stochastic RSI that's completely overbought. We have a bit of bearish divergence where the price is going up while volume is coming down on this end. There's a lot of things that are adding up here where it doesn't seem like there's a lot of growth for Tesla. But again, I'm not going to tell you if it's going to go up or down from here. I'm just going to tell you what the charts are telling me. And from here, this seems like we're getting to a bit of resistance, right? We got it seems like we're hitting some resistance from what this used to be support. This seemed like support here, and we wicked up to it. We got rejected. We're currently right here. The other thing we have to keep in mind is, these gaps. There's gaps on the weekly for Tesla, and obviously we just filled one recently, and we're kind of above it now. So let's pull up the rectangle. You see that we had a massive gap here on the weekly. So that means that the close and open position, there was a huge discrepancy where the open was a lot lower than the close from 1 week to the next. So we did fill that gap, right? That's one that we have to keep an eye on. Did we create any more on the other side? We got one here. Let's see. We got one right here. Kind of see it, but again, that seems like it's likely to be filled as we go down because it's right below it. But that makes sense why we actually came up so high on here, and I think a lot of it was just that it was so completely oversold, right? I mean, that's a pretty big gap that we saw from here to there, from 1 week to the next. But again, the 50 moving average and 200 moving average on the weekly are still very close, and if we're completely overbought, it's likely that 50 is going to follow in the path of down. 200 is probably going to still be lagging behind, catching up with this move to the upside. So there is a good chance that we could see a death cross on Tesla. I will say in the next 3 or 4 months, right? I'll be conservative. I won't be an irrational bear today. But seeing this, I don't necessarily think that that's a good look. And also, we talked about Elliott wave theory before. I think we're going to see a 5-3-5 pattern, which would tell me here. Let's see. If you start in 5 waves, you got to end in 5 waves, and usually the corrective pattern, if it's a normal market move, it's going to be a 3-wave move up. So we can get a, say, 1. Man, I can't even see it. Oh, not what I wanted. Not what I wanted. Oh, we're there already. We're already there. I messed up.
What is happening, Kevin? All right, real quick. While you're fixing that, let me go through something with them.
Yeah.
So they're reporting earnings July 19th. They're one of the first companies to report Q2 earnings. If we look back at the previous 4 quarters of earnings, for their last time they reported, it was a miss. In December, it was they beat expectations by about 7.28%. For that, they had a few big wins as well. So based off of the data we saw, that they reported, I believe, on Sunday with all the new deliveries, I have to imagine that they're probably going to have pretty solid Q2 earnings. So I wouldn't be looking to short Tesla here by any means. I think there's a good chance that even though they're up in 8 of the last 10 weeks, if we're going on the weekly, I still think that heading, maybe next week's kind of boring, but I got to imagine they're going to beat on earnings, and that could lead to another move up. I don't know if they'll get past 300, but it definitely doesn't seem like a good place to be shorting Tesla heading into their earnings, knowing what we know about the current state of their deals with GM, Ford, Mercedes, and also all the delivery, coming in over expectations for Q2 deliveries.
Yeah, absolutely. I think that's a great point to bring up. I'm going to put up this little level of support just to see if that's important. At 314, I'm just going to leave that there. Again, I filled out the chart. I don't necessarily think this 5-wave count's correct here, but we had it before the show and I deleted it because I'm an idiot. That's a 5-wave count, then followed by 3-wave count, which we got the rebounds, and then I would anticipate another 5 waves to bring us down. But we have this level of support or resistance that's up here, right? We see that it's acted as resistance here, it's acted as resistance here. We got a little bit of room on the monthly to go up, so I wouldn't be surprised after July, if we close out July and maybe we wick up to this 314 once again. I don't know if that's going to hold. Again, anything could bring the market down. Maybe they do miss on these earnings, right? Anything's possible. Probably likely it's not going to happen. But for the most part, I think that we are still going to be in a pretty good move to the downside once this finally does correct. Where could 5 waves take us? I mean, that'd be, let's say from up here, I think maybe at least a double bottom. Again, we have to go into this in depth and then come back with a better look at that. But for the most part, I think that 314 is going to offer some pretty good monthly resistance up there. And I think that we have done a pretty good job of creating this 3-wave correction, this ABC, right? 1 wave down for B, up for C. This could be overextended, go up to that little area right there. We filled this gap here on the weekly. So, a lot of correlation that we're seeing there, that we are getting close to the ends, but it might not necessarily be the end in the short term. So good call in there. Keep an eye on some of that news, JWeb.
Yeah, I think there's this is once again part of the fun of this game, right? And I'm starting to see a lot of bullish victory lapping going on across Twitter and everything, and that to me tells me that we're coming near the end of this rally. And the markets have a way of humbling people if you're getting too far out over your skis. So when I see people victory lapping and talking shit, it makes me think that we may be coming to exhaustion here, and people are going to be eating their words pretty soon.
Most definitely. I couldn't agree more. I'm going to pull up a bank stock now because, again, I think that, Q3, Q4, we're going to be seeing a lot of different moves within the banking industry. BMO is probably one of the ones that I see, having the biggest chance of some downturn. And I think I'm not saying that the biggest chance, but I think it's most likely given what our weekly chart looks like. You can see that we're putting in a parallel channel, right? And we got the 50 moving average here and the 200 right here. We're above the 200. We're completely overbought, and we can see that the volumes are pretty low as the price is pushing up. I think that maybe we get a little bit of rejection off this 50 moving average, and we could see us break from this parallel channel. I mean, where would that bring us? The origin is down here around $82. Maybe we go down to 81. But again, that's from, let's say, 92 to 81. It's about an 11% drop, right? And again, that would be breaking from this channel on the weekly. We could see something similar to where over here where we got a massive red candle. It doesn't necessarily have to happen, but I do think that if we are going to anticipate, some red in the market, I wouldn't be surprised if it comes from anything that's putting in these parallel channels, right? We're just finding a lot of resistance where a lot of things are adding up, and it seems like we're coming to a head in a lot of charts. But for banking, this is one that I'm keeping an eye on. I also want to pull up JP Morgan Chase because obviously they seem like they've been doing pretty well given all things considered. But again, a lot of things are overbought on the weekly, right? Everything seems to be overbought, and that 50 and that 200 EMA are pretty close to each other once again. And if we start to see, you're seeing rejection right here at the top of this channel, maybe over in the coming weeks we finally break out of this. We might find some support on the 50 moving average. Doesn't mean that we necessarily go below that, but we could fall below it and then go down to the 200. We did that over here. Whether that's going to be part of a short-term correction for this entire move up, that remains to be seen. But I do see a massive gap between here from this move all the way up to roughly around here. So 122, let's say 122 to 101 to 122. So I'm going to keep an eye on that range. Maybe we come down and fill some of that gap in. There's also this gap here that got filled in from this one coming down. There's nothing too much other than that, just this more fair market value gaps. We got the wicks here that close into those weekly positions. Let's see the daily real quick just to see if there's anything there.
And then Ace wants us to look at Riot.
Right. Yeah, for sure. Let's see. Yeah. So there's a little bit of a gap here. Maybe we do come to fill that out at 109. So we'll just keep an eye on that. But for the most part, I think the weekly is looking pretty bad for those two bank stocks. And we're looking at Riot now, right? Is that Riot Platforms?
I believe so. If that's their symbol,
All right. Gotcha. Okay, cool. So yeah, so let's pull this up on the weekly. The weekly, we're going to take a look at the macro.
It's crazy overbought on the what was that, the monthly that you were on before?
That was the daily.
The daily. Daily's crazy overbought, all the way to overbought.
Yeah, it's a pretty insane candle. Looking at this, it's got the golden cross, so it's moving up. Nothing I'm seeing obviously other than just piss missiles on the daily. Like, look at this thing, it shot up how much percentage today? About 16.38% at the height. It's currently up about 12.92%. So pretty good day for this one. I don't know too much about Riot, what it is, but this is a pretty insane one. Let's see if there's anything we can find on the macro that might not get us as bullish. A lot of resistance here, support resistance. We're breaking up above it right now on the weekly. We'll see if that does anything. It's likely to be heading towards overbought again on the weekly. But again, if it closes above the 200 EMA, maybe we'll find that as support and it continues. But again, I don't necessarily think that anything is extremely bullish right now, given just how overbought everything's been for a long time. Maybe some individual stocks are. This doesn't really give me too much negative. I don't see this as being too bad. There might be a little bit of a move here. Let's see, wave 1, wave 2, wave 3. So maybe this is the end of a wave, and then we start to see a bit of a correction. But for the most part, it looks pretty strong right now. Let's see the monthly. Maybe there's something there. Oh, well, there you go. Here's the monthly. So maybe in the short term, weeks, days, maybe two months or so, you might see some bullish price action, might stay in this range. But for the most part, the monthly is overbought. You can see that the volumes are coming down. We are at the 50 moving average. I wouldn't be surprised if some of this retraces by the end of the month. We get below this 50 moving average once again, that extra resistance. And maybe you do see some price action coming down. And this might be part of a larger move. Let's see. 1, 2, 3, 4, 5. Yeah, that could be a 5-wave move within itself. That's your 3-wave move to the upside, and you could get another 5 waves down. So this might just be a little, I'm not going to say scam pump, but it could definitely be a bit of a squeeze for anyone that might have been shorting that a lot lower.
All right. Anything else you think noteworthy before we wrap it up for the day? One thing I saw, another fun piece of data. It looks like the average 30-year mortgage is up to 7.1%. You got to love that.
It's great.
People like myself who were fortunate enough to buy about in 2016. I ain't moving anytime soon, unfortunately, until those rates come down, because I'm not giving up a sub 3% mortgage rate to go get one at 7. Get the fuck out of here.
Yeah, man, it's that's pretty bad. Again, I wouldn't be. It seems like it's a bad time just to be buying anything, any liabilities right now, right? Uh,
Yeah,
Again,
accumulate
what do I
assets,
what do I know?
cash
I'm a
and
kid.
assets, baby.
Cash its. Yeah, let's just look at this real quick. This is the total market cap. We can see that we broke up from here. Actually, you know what? The total market cap we looked at yesterday. Let's look at the DXY, because this is probably why we're seeing a bit of resilience in crypto right now, and why you might see a bit of resilience in some stocks. The dollar index came down in the news today, and we kind of been charting this, right? We said that this parallel channel was going up, making higher highs and higher lows, and we had a lot of resistance here with the 200 EMA and the daily. And we said that, we wouldn't be surprised if this came all the way down to 100.845 for a triple bottom, right? I think that's one that we were keeping an eye on. It looks like that we're probably going to be heading to 102.035 for sure. Maybe not today, but in the coming week or so. Maybe we find some support there and we're able to hold that. But for the most part, I wouldn't be surprised if we do come all the way down to 100.845. I would appreciate if it stayed at 102.035, because that's a three-way move. It'd be you can find the 5 waves in here, but then you find 1, 2, 3, big three-wave correction. And then that would hopefully, in turn, bring this weekly stochastic RSI down. As much as I love, the DXY to be going up, I noticed that this isn't a sustainable move to be going up in higher highs and higher lows. That's why we broke out of this. We found resistance on that 50 moving average. But again, if we find support somewhere down here, whether it's at 100.845 or 102.035, and we kind of start building our way in more of a U shape as opposed to a V shape, as we saw here, that's going to give me more of a confidence that we're going to start seeing the price of the dollar go up. And that's going to be important. Again, our key resistance as of right now is 105.651. If we break above that, obviously we have plenty of room to go to the upside from there. And I think that we are gearing up for that when you look at the monthly as well. The monthly is completely oversold, but it looks like it's coming and starting to make its way upwards. Maybe we're just coiling up in this area and we're just waiting for this to take off. We saw not the VIX, we saw the VIX come out yesterday or in the past 2 days and shot up a little bit. Does that necessarily fall in line with this? Maybe. I think that we are going to start seeing the VIX and the dollar take off pretty soon. Not when I say soon, I see relatively soon as in monthly. We're thinking still short-term macro here, but for the lower time frames, I definitely think that we have a little bit more room to the downside for the dollar. This news today definitely sent it tanking, right? This is a pretty good move that we saw on the downside today. That's what I anticipate from a lot of altcoins too. So if we can see we're down about 0.81%, still a pretty good move in my opinion. But we're putting these parallel channels, and none of the altcoins have broken them yet, and that's what really irks me, because I know it's coming. But again, the market is going to allow it to be sustained for as long as it possibly can. The dollar's by all means helping a lot of these alt pairs that are trading with USD. But let me just pull up Matic right now. Parallel channel, completely overbought in the daily. We're testing the bottom line of that parallel channel. That's a given right there. Cardano, once again, it's coming down from overbought, but we can see that we're testing the bottom line of that parallel channel. Is BNB doing the same shit? Yep, BNB is doing the same shit. None of these have broken yet. So I'm definitely over the weekend keeping an eye on these, because if Bitcoin decides to dump going into Sunday night, obviously to go down to that 29K level before making a move to the 35K, which I do believe it's going to do. Let's see if the alts survive some of those parallel channels. We might see a huge swing for BTC dominance, where price comes down and we start to see rockets go up at once Bitcoin starts flying to 35K. And again, this is stochastic RSI for the Bitcoin dominance on the daily. We're making really gradual movements, but again, we're at 51.52 after going all the way down to 50.94. So in my opinion, I think that Bitcoin dominance is not done. Bitcoin still has a little bit of gas left in the tank. And I think a lot of those alts that are putting in those parallel channels, higher highs and higher lows, are definitely going to start seeing some of the repercussions of, those patterns being played. So that's all I got for the charts. Definitely be safe going into the weekend. I think the weekly close for crypto is definitely be more exciting than the TradFi weekly close that we're getting today.
Yeah, it looks like the TradFi weekly close continues. We're nudging down on the day. I think markets are going to end pretty flat overall,
Yeah.
which seeing as how we discussed there were both bullish and bearish parts of today's data, it makes sense that it would be kind of a tug of war going back and forth here. So that's going to wrap it up for today's show. Appreciate everybody for watching. Ace, Mr. House, Randy, enjoy. Thank you guys for commenting as well. If you have not yet, hit some buttons down below for us: a like, a subscription, comments, sharing us out on social media. All of that helps a ton. We really appreciate it. Have a great weekend, everybody. We'll be back Monday, same time, same place, to talk about another fun week in the markets. So we'll speak to you guys later. Have an awesome weekend.
Take care, everyone.